time now on KROS for Financial Focus, brought to you by Nelson Core Wealth Management. The opinions voiced in this show are for general information only and are not intended to provide specific advice or recommendations for any individual. Any indices mentioned are unmanaged and cannot be invested into directly. Registered representative, securities offered through Cambridge Investment Research Incorporated, a broker-dealer, member FINRA, SIPC. Investment advisor representative, Cambridge Investment Research Advisors Incorporated. A registered investment advisor, Cambridge and Nelson Core Wealth Management are not affiliated. Cambridge does not offer tax advice. Now here's today's Financial Focus program.
Well, real pleasure to have Dave Nelson in studio with us, and a Happy New Year, Dave.
Thank you, Gary. You as well. Big plans did you have, or are you boring as I as far as being at home?
Pretty much. I think it was over the Atlantic the New Year when I went to bed. So
exactly.
So that worked out pretty well for me.
Yeah, me as well. I've never, I don't get into the. We're going to put this new rule in, or I'm going to do this, start working out, et cetera, all these New Year's resolutions. I've never gotten into any of that. Whole hum, I just don't see the significance of 1-1, flipping the switch. I can flip the switch on 12-1 or whatever. So, yeah, I'm pretty boring in that regard as well. So
I know you got a lot of family in town now, in the area. How was Christmas?
It was good.
Because I know you got some young ones.
Yes, healthy for a change. When you have 12, basically the oldest one is 11 years old, and so we work our way down as far as from there. And there's 12 kids, and a lot of them are in the 6 month to 3-4 years old, give or take. And so a lot of illness as far as that we've dealt with. But right around Christmas, we had everybody healthy. Everybody piled into our place. It was fun. We had a really good time. That's the normal type gathering that we would have, but it's been few and far between those type of gatherings just because of illness and not trying to spread some of the more serious illnesses and what have you. So everybody has the shots, and so we decided to get together, and all went well. So unlike when I turned 60 as far as in August, and so we had a little gathering then, and that was a big spreader, unfortunately. We came in, everybody pretty healthy, and by time, departed, give or take a week later, you're hearing this one has COVID, this one has COVID. So anyway, this one was good.
Well, that's good to hear.
Yeah,
that is good to hear.
Yeah.
Because, we had our 50th year class reunion. It was in August.
Yeah.
I didn't go, but I was talking to other people said, they ended up getting sick after that.
Yes,
so, even then. So you always got to be careful. Yeah,
in the shots, they basically take something bad and they make it, not so bad. And so, again, I don't want to sound like I'm against it, and I don't want to sound like I'm crazy on the other end. But again, I think the evidence is there that it makes sense as far as to have it. So, again, going back to ours, the illness wasn't severe, so that was the good news. But some people had it. And your reunion, I hit the 40th about a year or so ago. And I was chatting with one of the folks. He works at Walgreens, and he said he went to it. I was out of town, didn't make it. And he said that it was a big spreader there, and some people were pretty serious as far as, ill from that. So so anyway, yeah, we're blessed as far as not to have that. So
of course, we just had the holidays. Santa Claus rally. Was there one? Wasn't there one?
No, this year, and it there's different definitions. Probably the most common one is the last 5 trading days of the year and the first 5 trading days of the new year. And so that's typically referred to as the Santa Claus rally, and that hasn't unfolded anything close to what people are hoping for. Again, we spent an enormous amount of time, and we can probably drill down more in depth as far as the second half, but all the discussion now is on inflation and, the ramifications and whatever from that, as far as the ripple effect from COVID. I like to, again, remind people as far as going back to the last crisis in 07, 08, 09, the last major crises as far as back then, the Great Recession as it's referred to, we started cutting interest rates back then, brought it basically down to zero, and that's an inflationary type transaction that's taken place. So you take that ripple effect from this entire time of having this policy in effect, and then throw on top of it COVID, and you have a mess. And we're in a mess right now, and this mess is probably going to get a little worse before it gets better. Around the globe, things are cleaning up a little bit quicker than as far as in the States here. But the end result is it's probably tough sledding for a period of time here. And again, as I'll probably expand on as far as in the second half, I wouldn't be a hero at this point and think that everything is on sale and I should be buying today. Yes, it's cheaper today than it was. Apple's a great example. Apple, they make the computers and the watches and the phones and all this stuff. You know, they've just been roughed up in the last week or so in a pretty significant way. I think yesterday alone they were down about 4%. These are big, big moves. People hear about Tesla. You know, Tesla was a $1.2 trillion company, and today they're somewhere in the neighborhood of $300 billion. That is a massive drop. But again, all indications are it's not done. And so again, individuals need to use their brain, not their gut, as far as to make these type of decisions. And again, we would be pretty cautious as far as anybody taking any aggressive moves at this point.
Again, visiting with Dave Nelson. Great to have him in studio. Now, you talked about 07, 08, 09. You, of course, were in the industry at that time, had been in the industry for a while. Is there anything you can draw from that time to reassure folks at this time?
Yeah, we got through it. That's the biggest thing. The United States is not going away, as I tell people all the time. But I'm not a believer in just put your money in and hope for the best, which is, unfortunately, 2/3 of this industry is pretty much bought into that concept. Again, when you're retired, that's a whole different ballgame. If I'm working and things are bouncing around a little bit, I can probably tolerate that, even though emotionally it's going to drive me crazy. But again, we're not talking typically to those individuals. The bulk of the people that come in that we visit with are probably 50 and up, many in their 70s and 80s. They're dependent upon this pile of money as far as to generate cash flow for them, and they're going to need that cash flow for probably an extended period of time if they live as long as they like to live. And the importance of not closing your eyes to this fact. I mean, if you had all your money in Apple over the last 10 years, you're still in pretty good shape. But if you're the unlucky devil that bought Apple, give or take, let's say a year or so ago, you're down north of 30% right now. 30% of your money has disappeared. Now, will it reappear? Everybody always wants to say that. It always comes back. And then I have to bring up my favorite. And again, it's not to pick holes in this company. It's just to say this is reality. And that reality was this tiny little company that I love to talk to people about, that everybody out there has heard of. And this tiny little company in the year 2000, the stock was trading at $64. That stock price at the peak of the crisis in early 09, was under $6. That stock today is somewhere in the neighborhood, and they've had the splits and split again as far as the stock price. Reverse splits, as it's referred to, is somewhere trading around $15 today. And that tiny little company is GE. And so again, when people talk about, well, it'll go up, maybe not. And so again, you got to be careful. You have to use your noggin and have a rule in your mind as far as in place, as far as how you're going to buy and how you're going to sell. And if you don't, you should not be investing that way. And if you're working with somebody else, you should understand as far as their approach. Are they going to put the money in, say a prayer along with you, and hope that things work out? Or are they going to be proactive, trying to mute some of the downside? Did we avoid all the downside as far as this last crisis? No. I mean, the NASDAQ was down 33% as far as last year. The bond market, a 20-year government bond, was down north of 30%. So it's a really, really tough year. It's a trifecta that we've never seen before. We had real estate that got thumped, we've had stocks that have been thumped, and we had bonds that were thumped. It was a tough year. But again, most individuals out there, most individuals should have been diversified, and even a diversified portfolio was down probably somewhere around 25%. We beat that by a long shot, but again, not as good as we would have liked, but the end result is that being proactive, you can kind of see some of this stuff coming, even though you hear people say, nobody can time the market. It's not timing the market, it's trying to look at the market with open eyes and make decisions as far as, does this feel overpriced? And if it is, start taking a few chips off the table.
Before we do take the break, I always hear you talk about, the upgrades, the software, the tools that you now have at your avail that you might not have had back at that time. How much of a benefit is that, Dave?
Literally, it's a massive benefit as far as these tools have been pretty darn close as far as to calling the maneuvers as far as in the market. One of the models literally was updated 1/1 of this year, and it's in a neutral stance, which is basically saying There's not a lot of downside, but there's not a lot of upside as far as this point in time, too. So, yeah, technology and having these things refined on a regular basis is really key because the rules are changing all the time. The rules and the tools that work back in 07, 08, 09 won't necessarily work in this environment. This is a different animal that we find ourselves in now.
So what are we talking about in the second half of the show?
Inflation and deflation. That's
right.
Probably the key.
All right. Check of the weather now, brought to you by Midas.
A much calmer day weather-wise. Not going to be dealing with any fog, but instead, mostly cloudy skies and a couple of snow flurries at times. We'll see highs into the mid-30s. A few snow showers tonight with lows dropping into the mid-20s. And more flurries for Thursday. We'll be back into the middle 30s. With your Storm Track 8 forecast, I'm meteorologist Andrew Stutzky.
Things haven't changed. Overcast, 33 degrees, southwest winds. Our update brought to you by Midas. Winter is here. The Clinton Midas is ready to prepare you for whatever old man winter throws your way. Be sure to get started with an interstate battery, good visibility with new wipers. And of course, you are going to want the Clinton Midas to service your vehicle. And oh yes, tires. The Clinton Midas can fit your vehicle with the proper tires so you can be assured of a sure grip on the road. All this and naturally brake. The Clinton Midas, 1432 Lincoln Way, phone 242-2511. You will be ready for winter. Trust the Midas touch. Visiting now with Dave Nelson. Inflation, deflation. We talked stagnation.
Yes. It's a complicated environment we find ourselves in. I think the biggest thing to most individuals is that the average person out there really wasn't investing heavily in the 70s and the 80s. I mean, we had pensions back in that day, and people just really didn't have to worry about this type of stuff as a whole. And what was unique about that period of time was we had inflation, runaway inflation in the late 70s, early 80s. And so today, 40 years later, is probably the last time that we've had this type of level of inflation. So we really haven't had inflation pretty much that entire time. So this is the first go-around for a lot of individuals out there. And again, the investing lineup, as far as that exists, as far as in a period of time where you have runaway inflation, is, again, different. And probably the biggest item that individuals, and I got to be careful in how I word this, that I'm not recommending, but commodities. And so there's ETFs that are out there that invest in a basket of commodities. And so that was a really good investment looking in the rearview mirror last year. I mean, depending on the type of makeup of the commodities, you were up 20, 30, 40% as far as last year. That's oil, that's softs, which is a fancy way of saying like corn and beans and things of that nature. So again, not recommending this. I'm just saying as a investment tool, last year that worked quite well. How come? Because we had inflation. Those are the type of investments that work pretty well as far as in that environment. Stocks often struggle as far as in that environment. Bonds definitely struggle in that type of environment because you have interest rates going up. And if people remember my teeter-totter concept, when interest rates go up, the other side of the teeter-totter goes down, meaning the value of your bond goes down, and vice versa. That's why, again, people have been spoiled over the last 30, 40 years, where interest rates have been pretty much trending down the whole time. So the interest rates go down, the other side of the teeter-totter goes up, meaning the value of your bond went up. So you're making a good rate of return and taking very little risk. The rule set is different today because, again, inflation, we're in it right now. Deflation is probably around the corner here, not too far down. Now, that's not necessarily throwing stones at the Fed. The Fed is trying to do their job. They're trying to mute inflation because there's nobody out there that hasn't been affected by this inflation. You go in the store, you see as far as what you're paying there. You go buy something as far as out at Home Depot or one of the other places, Ace Hardware, you see the inflation there. You go to the pump, you've seen inflation as far as there. So again, this is a real issue. Now, the way typically that the Federal Reserve tries to tweak that is they increase interest rates. Well, we've had some massive increases in a very short period of time. So now the argument is, have they done enough? And so many of the experts are saying, nope, we haven't done enough. We're going to have to go a little bit more. Well, again, the fear is on the other side of this, and the other side of it, not 5 years from now, but literally 6 months, a year from now, we could basically tip over the other direction and start talking deflation. And I think the likelihood of that is probably increasing every single day. That stems primarily from a recession. And we're asked all the time, as far as whether it be just clients, whether it be through the media in some form, what's your take on that? And I said, globally, we're in a recession right now. It's typically a lag time of about 6 months before it's called, but there's no question globally as far as that we're in it. The U.S. is kind of, depending on how you define it, it used to be 2 consecutive quarters that you have basically the GDP shrink, which we've had. That's defined as a recession. Well, again, there's other definitions out there, and so this can get kind of mucky. But whether it's defined as a recession or not, clearly the market is rolling over. Clearly you see it as far as in real estate, as far as the number of people that are willing to step into a home today, where 6 months ago they were definitely eager to get into a new home or remodel or whatever. But interest rates have spiked so much, it's really cooled a lot of people's heels. So I think individuals, again, kind of summarizing all of it, inflation is still with us. It's starting to dissipate. Recession and subsequently deflation is probably in the cards as far as down the line. Translation, you need to be really sharp as far as the type of instruments, investments that you put in your portfolio. And the bottom line is, now's a time not to be a hero. I know I've said that the last several months. I continue to say that. It's really, really important that people try to preserve capital at this point in time.
Visiting with Dave Nelson on Financial Focus. Now, you mentioned globally being in a recession. Let's kind of break down. I mean, you've got the United States, of course.
Yep.
There's Europe.
Yep.
China.
Yep.
Asia.
Yep.
Russia. What
Yes.
kind of a role do they play in as far as global economy?
The global economy, they're a dot. I mean, as far as just sheer size, they really are. I think it's somewhere in the neighborhood of 3 to 5% of the global economy. So they're a dot. However, that dot is caused a lot of the pain that we're going through right now as far as what they pulled off over in Ukraine, and as far as gas prices are concerned, as far as taking pretty much what they're producing off the market as far as oil and natural resources. You talk to a farmer as far as what they're paying today for fertilizer versus what they're paying, say, 2 years ago, and they're just gasping here in the numbers as far as that they're going to have to pay to get the fertilizer. Well, a lot of those ingredients come from over in Ukraine and in Russia, and subsequently that's impacting as far as those individuals, which then impacts you and I that aren't farmers, but the products that we buy as far as that they produce. So it's had a great impact, and it's not going away, unfortunately, it looks like, for a period of time, and it'll continue to rattle. And it, again, I hear it, I sound like a calloused individual, that all I'm concerned with is the monetary side. Just the human destruction that's taken place, it should be and is front and center. And again, the emotional aspects that are going to come out of it. Hey, even if I don't die over there, I've witnessed all kinds of people dying. I've witnessed my entire life being blown up as far as in front of me. It's just a really catastrophic case. And again, to believe that people could have any confidence in this individual as far as over there, don't get me started as far as what I think of him, along with other individuals out there that are like him, that don't care about mankind other than themselves. Yeah. So it's pathetic.
Yeah, it is a real tragedy. There's no doubt about that. What about Europe? How much of a role do they play now in the world economy? Of course, it used to be the sun rose and it was never set on the British Empire.
Yes.
But that was a long, long time ago.
Yes. But
how big of a role is Europe?
Yeah, it's still a big player. It's become a more significant player as far as just looking at the roles that they want to play and feel they need to play as far as going forward. A good investment that individuals could have looked at, say, a year or so ago, is the defense arena. And you look at Germany, you look at Japan as far as what they're devoting as far as to protect themselves as far as from these type of invasions, what have you. So the defense industry as a whole, anybody making bombs and planes and whatever, they've really been prospering as far as through this period of time. Will that continue? Yeah, I think it will. I think everybody's caught up in this right now. They're paranoid as far as about tomorrows, and they want to make sure that they can, basically defend themselves. They don't know if they can depend on the United States as far as that we'll step in and play the role that we have over the last multiple decades as far as looking at the global landscape. So Europe is very, very important as far as the global economy depends again how you define Europe, but it's probably in the neighborhood of a quarter of the world production as far as GDP, as far as on a global basis. Big player. Their markets have done much better than the U.S. Maybe you're aware of that, maybe you're not. Maybe the folks out there are too. But probably the main reason for that is just the volume of their economy has very little technology being developed there as far as the big tech companies are in the U.S. They're the ones that have been roughed up the most, and subsequently that's taken our markets down pretty significantly. But if you look at the U.K., as just one example, their markets last year, I think they were negative 6%. Contrast that to the U.S. Well, that has a lot to do with oil production. And so a good percentage of their economy is energy. And subsequently, that energy is last year or two has really been meaningful as far as trying to make those stock markets move in the right direction, not in the wrong direction. So yeah, Europe is a big part of it. And then, Asia as a whole, everybody likes to talk about China as far as the impact and the big gorilla over there. This, now that they're kind of repealing the COVID restrictions, the economy should take off is what everybody's, believing. Well, there's going to be still a lot of apprehension over there, and you're seeing it. Yes, the markets have gone up some, but they haven't gone up nearly as much as what people would have thought. And subsequently, again, it's an area that I'd probably be quite cautious in. If I were investing, I would take a hard look at a diversified mix of Asian countries versus just going in and jumping in the deep end as far as strictly in China.
It's been a couple of years. You took on Nelson Corp Tax Solutions. They're getting ready for a busy time, no doubt about that. How are things looking on that side?
Really good. We've made a lot of changes as far as to the operation, and we basically have brought together both entities under. Yes, we've been under one roof, but legally under one roof. So a whole different mindset and a change there. It's something that I think we've wanted for a couple of years, but we had to wait to make the adjustments, what have you. We've got really good people there, really hard-working people as far as on that side, and the other side is going to be chipping in as far as come tax season. I think it's, and I'll be close on this, but I think it's roughly 1,600 tax returns, or families, I should say, that we do taxes for. That's a big undertaking in a very short period of time. So yeah, we're excited about it. Things are good as far as from that standpoint. And again, we want to make it better all the time. Always looking for input as far as from clients. What can we do better? And truthfully, we're always interested in hearing something like that. If there's an issue, a problem, I definitely want to hear it. And again, at this point in time, we're quite confident that it's going to be a pretty smooth a year as far as from the tax perspective.
Great to have you in studio. Before we let you go, our Men's Day, our annual Men's Day, will be coming up on Friday, January 27th. Now, you've always had kind of a conflict with your basketball because it always seemed to be homecoming weekend.
It really was.
But you're no longer coaching.
Yes.
So we're going to get you in studio on the 27th to find out a little bit more about Dave Nelson.
Okay, I guess we could potentially. I think they were chatting with maybe having Andy come up here, but we'll work it out. Hoops, yes. For those that don't know, I coached basketball high school for 18 years, I think it was, 26 years total coaching, and I packed it in this year, and the bottom line is, yes, I no longer have the homecoming that I have to go to and try to pump up the crowd and get everybody jacked up and ready for the big night. So
they haven't invited you back to do that?
I don't think the teachers and the principal are up to that one.
Oh my goodness.
I did a good job. The kids always enjoyed it, but I don't know about the others. So anyway, yes, yeah. All right. Well, Andy or I will be up here, so I'll look forward to that.
All right, very good. Get you both up there.
Yes, we could do that.
All right, thank you so much.
Thanks, Gary. Yeah, literally.
Financial Focus is a production of Nelson Core Wealth Management in Clinton and Davenport. The opinions voiced in this show are for general information only and are not intended to provide specific advice or recommendations for any individual. Any indices mentioned are unmanaged and cannot be invested into directly. Registered representative, securities offered through Cambridge Investment Research Incorporated, a broker-dealer member FINRA SIPC. Investment advisor representative, Cambridge Investment Research Advisors Incorporated, a registered investment advisor. Cambridge and Nelson Core Wealth Management are not affiliated. Cambridge does not offer tax advice. For more information, visit our website at www.nelsoncore.com.
And now, Dan Patrick Show.
Dan Patrick.
When we're talking about MVP candidates, now is when you play like an MVP candidate. And Jalen Hurts did on the